Good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is FOMC day. Yeah, we had the Federal Reserve notes, and we had reactions to that for this Wednesday, April 10th, 2019. We're about 2:20 in the afternoon. These aren't quite the settlement prices, but this will be very close to how you finished up in the day with the with the metal markets. I said energies there, with metals, and you have again the gold gaining on the silver market. Notice that the dollar giving up the lion's share of the day's gains, as most of the foreign currencies are up against the dollar. Now, the FOMC came out. They don't see any changes taking place for the rest of 2019 into 2020. They are concerned about world trade. And in fact, in tonight's reports, when I put this all out for people, I really cover in detail what the minutes said, the highlights, and I actually am going to include a lot of the minutes where they talk about how they're buying, what they're doing to run off the balance sheet. And these are all their minutes, not my take on it. As you can see in the energy market, you're still moving to the upside here, which impacts the metals. And what that is partial in part of is Venezuela. Now they're down to under 1 million barrels a day in production. The IMF today pulled the remaining SDR, about 400 million that they could have been drawing on. So that's another squeeze factor. So they keep losing the ability there to get hold of any funds. Very, very important what's going on. Steve Mnuchin today on CNBC talking about the U.S.-Chinese trade deal. He says it's making good progress. When asked why the U.S. is suddenly picking this time to go after Europe with more tariffs, sort of dodged the answer. When we look at the gold, the one thing that's evident is from that 1329.20 high close, and this is a chart on a weekly basis of closes. And obviously, we're not closed for the week yet. This is only Wednesday, but we are up about $13. And notice where the market got its support, at that 18-week moving average of closes. When we come to the daily chart, here's what I find interesting in gold. Very hard trade. You go up, you come almost straight down, and now you've made about a 50% retracement of that range from this high to that low. On the way, the market is not trending. Frankly, it wasn't trending on the way down. What it had was a higher high and a lower low. Then as the market bottomed itself out here, it's made the flip-flop of that. It's got the lower low and a higher high. That is not how a trend is made. So you're getting reactions and counter-reactions that are very, very difficult to try to trade with. What's evident is the market found support at the 100-day moving average of closes, challenged the previous 2 days, the 18, and now the market's moving away from that. Where it might go to is the big question. On the downside, when I put on the Bollinger Band, you see that the combination of the 100-day and the lower Bollinger Band were the support. Now, if the market were to just take off to the upside, the resistance is pretty evident at the upper Bollinger Band at 1327.70. Last time it challenged the Bollinger Band, it was short-lived and the market reacted back down. On the downside, right back up. So from this 1284.90, we're up now almost, if you look at it, about $30 to the upside on that. Momentum is up, as measured by slow stochastic oscillator. So I have the bias up because I'm over the 18-day average. I'm not trending. I see us in this broad trading range still. In the ETF GLD, it's the same identical thing. The lower low into the Bollinger Band, then back over the 18-day average without a trend. At least on the downside, this market did trend a bit. You can see you had the lower highs, lower lows that culminated in the challenge right through here. You're not getting that back on the upside, though. In GDX, you didn't quite make it to the lower Bollinger Band. You found your support in this general area. You've been picking up, and today we're starting to get a reversal where the market's losing this upside thrust that it had going. Wouldn't surprise me if it tries to find its support against the 18-day average of closes. The problem is you're caught in this broad sideways action, and I guess I'm saying that about the whole gold complex. When we come to the gold-silver ratio, what I did point out was pretty much on the money. The first challenge of this 18-day average of closes in red, just the way it did here and here, ended up with the market still bouncing away from it. So those that want to own gold are doing better than those that want to own silver as a ratio. In other words, you need to own more silver to buy 1 ounce of gold, not less. In the silver market, you can see that battleground. Just yesterday, we got up to the 100-day average, came back right to the 18 after getting resistance there. Today came down. Now, what would be interesting in the chart is taking out the 1531 level, because what that could do is give you the higher lows, higher highs into the resistance, literally right at it at the 100-day average. And if that were broken through, I think you'd start hearing talk about maybe 1555. To get that done, not easy, because you're not trending. You got a lower low and a higher high. Very difficult chart. The copper the same. And let me tell you what bothered me today. When I was watching Steve Mnuchin talk about how the trade talks with China are going, I immediately opened up my copper chart, because he's saying all these positive things, yet copper didn't react at all to it. Is it tired? What's going on? I don't know. But normally you'd say, okay, we're getting closer and closer. We've gotten through some major issues. But as you listen to what he was saying, he didn't answer the question, is the U.S. going to lift tariffs on China? He still said that there's a lot more to go. They have a morning meeting. Last night they worked into the late hours so that they flip-flopped their hours for their Chinese counterparts with the American counterparts here. But the market's just not trending. It's just sort of drifting sideways in all this. In the platinum market, a pullback, lower low than yesterday. Then the market closed higher in an overbought condition. Now, when I look at these numbers, both numbers today are over 80. They weren't yesterday, so you're plain overbought and no more than that. In the palladium market, we still have the pattern of lower highs. I even can probably, depending on the close, take this high arrow and move it here. Now, if that's how the market finishes, lower today, if you were to take out yesterday's high, that is Tuesday's of 1373.30, and take that out, it would be a signal that this bear run has come to an end. It doesn't mean it has to be a bullish run. It would be a technical signal that it's worn itself out, and prices might then even retrace back to that 18-day average. It would certainly break the pattern of lower highs and lower lows. In the dollar index, I think today's a failure day, but not enough to say you're out and out bearish yet. If the market were to close under 96.41, then I would say that. Why? Lower highs, lower low. At that point, you'd be under the 18-day average. You're not yet. And very important, look at how the momentum. You had the embedded reading, then you lose it yesterday. That often leads to price and the 18-day average coming together, which occurred just now. So the market's met its downside target, and the question is, does it build on this? I think we're going to have to wait and see what it does tomorrow before we know. But in talking about all this, you know, I did my special stock report, and I only keep these reports up 5 business days. And the reason is they're daily reports. They're meant for the next couple of days of trade and no more than that, right or wrong. And if you're interested in seeing, first of all, the seasonals. I didn't include price counts on these just yet because I knew the Dow was problematic. The stronger of the indices is the S&P and NASDAQ than either the Russell or the Dow. But I did one on the Dow because of Boeing and the other parts that are going on with that. So if you're interested in seeing what it's all about, how to read it, well, just go to our website. And under Research and/or Education, you will see the tag Ira's Stock Index Report. I think it was dated 4/8. Take a look at it. It's going to disappear in just a few days. I'm Ira Epstein. You have a good day.